So let's see what we got here today. Today's Valentine's Day. Happy Valentine's Day. It's we're looking at S&P 500 futures. Let me pull up the chart here. So yesterday we had CPI, and the CPI. From the CPI, we got a big drop from 50.2350. That's where I marked here the scene of the crime. We dropped, we opened down here, and we took this whole range. I thought we were gonna find some buyers here, but no, we came all the way here. That was my second spot that I was looking for buyers, which is where the 21 EMA and the 20 moving average are. We took the previous week low by a couple ticks and found buyers and rallied the whole afternoon. Actually, not even the whole afternoon. Like that was like way at the end of the day, right? And we settled down here at 70. I think it was 72, something like that, 71. And now overnight we were pushing high back again, retested the 5,000 level and at this low volume area, and now are coming down. And as I was saying this morning, if we don't hold the 5,000, there's a little bit of support here at 84, but then there's a big high volume node at 81. And yesterday's high is at 88 and a quarter. So that would be the first thing to look at, like, because right now we're opening in a gap, right? Inventories about 80, I would say 80% long. I don't really track the exact number, but I can guesstimate about 80%. So if first thing it will be, do we get back in here to yesterday's high and bounce back and try to reclaim the 5,000, or do we take this low volume area and go back into this area, right, where we were balancing a few weeks ago? The 20-day point of control shifted up here at 67, right? 67. And actually, I don't know if it shifted. I think it was already. It was still here, right? Oh no, it was down here. It was at 15, and then now it just shifted up, right? So if we don't hold yesterday's high, these are the levels to look at: 72 and 67. And then again, we're gonna be trading in the same range. So this is likely to hold because it was defended very strongly yesterday. But if it doesn't, then that's going to be an indication that the sellers are still pushing, and we can look for 50, which is this high volume node, and then an attempt to take yesterday's low again. Right now we're in balance on the daily, we're in balance on the weekly. Monthly we still are one time framing up. And if we get below this low, we have this 49.15, which was the previous point of control. And then there's some support here at the 4900 level. But then that's, then we have a lot of poor structure down here that we haven't cleaned up from December, from last year, single print and the December high. Now, if yesterday's hold and we reclaim 5,000, then we're gonna get into this level, which is the 5012, 5013, right? This untested point of control. And then very likely attempt to fill the gap and come back to the scene of the crime first and close the gap. And if we close the gap, then there's a possibility that we squeeze higher and get back into this 50-42 level and retake the previous week's high, and then keep squeezing higher. Yesterday's range was 51 points, 52 points on the RTH plus all this 44 point gap. So overall was like 100-point range, right? So it wouldn't be surprising to see the gap fill and get to this 50-42 level, right? So I'm gonna be looking at this as two different distributions. This one, and then this one from 5,000 to here. Remember the other day I was saying that this will likely fill this area, so maybe that's what's going to happen if we stay above 5,000 and then we start trading into this range and filling this with volume. And remember, if the rule is, if you get to, I mean, we saw it very clearly yesterday. We attempted to get below that range and then we failed, so look below and fail, so now we came back all the way to the other side of the range. So in this case, if that happens, like if we start trading back above, then we will likely see a move back into the higher side of this range. The question is, what is the range? Because this is, I mean, this is the range, but it still hasn't been retested, right? So we gotta see where how high we could get in this area. Okay, NQ. NQ. Very similar story, right? We have this range right here. Attempting to get above 17,800. We have also a higher volume node here, 17,845.50. That is going to be the target if we get above 800. And the gap fills at 17,921.50. And same thing, right? We have the range that extended once we broke above. So traveling back into the 1840 would be the final target, and then see if we can extend this above this. Below, if we stay below this level, then the targets are, it could really be all of this, right? Like it would be 700, like, you know, you take it one level at a time. 700, 680, 640, and then if we get below the 20 DMA, then 590 will be the next level, which is the 20-day point of control. But you know, in this case, we have, these are very similar as far as volume goes, so these are all likely targets. Like these are all levels where which we're gonna find, you know, they're gonna be magnets. And then this is some stronger support that if we break, we're gonna go to the 17,340 right there. I think that's about it. Crude oil, it's still going higher. It just hit 78.55, and I saw this morning that it had a target of hold on one second. I have a target for crude at 80 $20 or 20 cents. That's my my upper target. if we get below the 200-day moving average, which right now is at 30 something, then the target is on the downside will be 76.80. All right, good luck everybody, and have a happy Valentine's Day. Don't forget to treat your significant other to something nice today.